Harsha is also ready, and Harsha, can you hear me?
Was silent. Yes, Nikunj, I can hear you.
Okay, Harsha.
And thankfully, we don't have any telecom investments.
Wonderful, Harsha. But you know, the technology what we are using right now is an indication that you know where telecom sector in India is really headed.
Very true, and thankfully we are underweight on the sector, and we don't see any improvement in terms of profitability of this sector. The competition is intense, so we continue to remain very negative on the sector.
What we are celebrating on ET today is a rise with India moment for mutual fund industry, and the fact that today the data which has just come out in the public domain is that we've seen record inflows of 20,000 crore in the month of August. What has led to this kind of an uptick in mutual fund inflows? I mean, is it lack of alternatives? Is it India belief? Why are flows so strong and gangbuster?
Nikunj, there are combination of factors. One, clearly, I think the historical returns of equities have been very, very strong, which many investors look at and start looking at alternative investments and try to weigh which is better. Although we keep advising that it's not a good idea to look at historical returns and invest into any asset class, but it remains one of the key factors. Secondly, there is lack of appeal of various other alternate investments. Most of them have lost sheen, and the expectations are even going forward, some of these asset classes like real estate, gold, etc. are unlikely to give great returns. And on top of that, within financial assets itself, I think more money is flowing towards mutual funds, simply because the bank deposit rates have been slashed once again in the past couple of weeks. And while the interest rates have already gone to lower levels, the recent cut has again made investors nervous about bank deposits in terms of returns, and that money possibly is also coming into mutual funds. Having said that, this is not a phenomenon that we have witnessed only in July or August. In fact, for the last 5 years, in fact, mutual fund industry has almost tripled in size. We were at close to about 6.6 lakh crores at the end of financial year 2012, and right now we are at about 20.5 lakh crores. So there has been a steady increase over the past several quarters. Yes, I agree that in the last couple of months, maybe because of the after effects of demonetization, maybe because of bank deposit rates coming down, and also increasing investor awareness about the attractiveness of equities from a longer term perspective, all these factors have really played out, and we are getting very strong flows into mutual funds.
Right, Harsha, that's of course our big theme right here on ET now, rise with India, and I think the domestic investors definitely rising with the markets. What's the focus? I mean, how do you see this trend building? Because now there's going to be a lot of money chasing a lot of funds. I know you're CIO equity, but it's going to be a problem of plenty for a lot of investors looking at equity funds, mutual funds, sectoral funds. So what is the kind of advice that you would give out to viewers tuning in right now on how they need to balance a mutual fund portfolio?
First of all, for retail investors, what we are suggesting is, if somebody is under allocated to equity, then there is a need to make staggered investments even at these levels. There is no need to chase momentum, because while the fundamentals are taking time for revival, the liquidity has been so strong that the market's valuations have become elevated. So to that extent, there is no need to chase momentum. And at the same time, if somebody is overweight on equities, and if market continues to move up, then at higher levels there should be proper asset allocation, and there should be profit booking in equities. Having said this, within equity basket, we are suggesting that most of the investments should still go into large and large cap oriented funds, because that's where valuations on a relative basis are better. Most of the froth has been in the micro cap segment or the small cap segment, and fortunately for us, under our product portfolio, we do not have any micro cap focused funds. So to that extent, we have been able to deploy our inflows into relatively larger names and at various levels. So within equity basket, I would suggest that the tilt should be towards large and large cap oriented funds, and sectoral funds is another thing which again the entry and exit has to be very, very right, which a normal investor cannot do on his own. So one has to take advice of financial planners and advisors, and may make small investments into sectoral funds, but the bulk of the investment should be in diversified funds, and especially at this kind of valuations, it should be tilted towards large caps.
Harsha, we were just chatting about as to whether or not any of the pockets in the market are reaching those bubble territory, and it's surprising with the kind of rise that we've seen in the entire NBFC space. Today morning we were looking at some reports wherein the first question was, are NBFCs already getting into that bubble zone? Do you think that NBFCs is that one pocket where one needs to tread with caution, or is there any other space that you've identified where you think, okay, at least I should take off 50% of my profits off the table from here?
Clearly, NBFC space is one of the areas where valuations have really risen in the last couple of quarters. Today, what's happening is almost all NBFCs are getting similar valuations, irrespective of the kind of growth that is in front of them, or irrespective of the kind of risk that they have taken to reach that size and probably going ahead what they're going to do. So I think at some stage there has to be some correction in the sector which will differentiate the leaders and the laggards in the sector. But today, unfortunately, that's not happening in this sector. Apart from NBFC sector, we are also seeing elevated valuations in some of the consumer discretionary names, some of the home building names. While we believe that the long-term growth is very strong in these sectors, in the short term at these elevated valuations, whether you make money is a question mark. And to that extent, we have been cautious on some of these sectors. If you look at our banking exposure, banking and financials exposure, most of that is tilted towards private banks and very little towards NBFCs. And even the NBFC that we have in our portfolio is more of a retail focused NBFC. Similarly, our exposure to consumer durables and home building materials have also gone down moderately over the last few quarters. So to that extent, we are trying to manage our risk by not putting incremental money into some of these sectors.
You know, Harsha, since we are celebrating this Rise with India moment and the fact that AUMs in the month of August have reached a staggering 20,000 crore rupees, tell me, where is it that you're seeing money flows? Because it's not just equities, but gold as well has slowly crept up to a 1-month high. So are you looking at any gold ETFs seeing buying, or are you sensing that SIPs are still very much concentrated towards equity as an asset class?
At Kotak Mutual Fund, we do manage a gold ETF, but we have not seen any increase in assets in the past several months. So there has not been any change in the investor interest towards gold at all.
All right, Harsha, we leave it at that. Thanks very much for taking out the time to speak with us today. Really appreciate your views and your advice to our viewers on how they should approach their mutual fund investments.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.